things of that nature.
It's so funny. You talking about granite and countertop with that. I've never looked at any of my notes to see what kind of countertop they had. I've never looked at cabinet. I don't even care what kind of fridge they got, right? I care about the fact that in 30 years, what's that value of that property going to possibly be? Because in
Yeah.
15, I may have to foreclose on it, right?
No,
So
100%. And I
this,
bring those factors
yeah.
up because the home's going to last a lot longer than the previous materials that they had used.
Are
These
you
new
using
building
studs on the
codes.
outside? Are you putting studs on the outside? Or are you just covering over top of the old metal?
Yeah, so we're applicating on the outside with a vapor barrier underneath that, which adds to the insulation value
Sure.
with the double side of it. But there's no need to add additional 2x4s unless that the structure is when we take the siding and the interior paneling off. Obviously, if we're seeing anything that's a blaring concern, we're going to end up replacing anything, as well as, like termite damage, things of that
Hmm.
nature.
Yeah.
Ultimately making sure that the quality of the existing unit, in addition with our rehab and refurbish of anything that's, needed. We're doing a lot of cyclical processes. They're doing the same thing on the same house.
Hmm.
So it's been a real kind of blessing to be able to fall into a program where we know on every property it's going to fit these criteria and it's going to hold a stronger value. Am I going
Sure.
to say that these homes are going to appreciate? I'm not so much saying that. Can they depreciate? Yes, they can depreciate, but the quality of that home, to think that it's going to disintegrate over a 15-year program is I don't believe
Okay.
to
That's fair.
I don't believe that to happen. Why? Because these mobile home parks are buying for a 50-year return. If
Sure.
all 400 of those homes
Yeah.
that they bought on the idea that this 50-year program is going to be a cash cow and it's generational wealth for BlackRock, Vanguard, the big three that are buying mobile home parks. If they're buying mobile home parks for the long-term idea of the cash cow of mobile homes, and they know that these homes depreciate, and they may, let's say hypothetically to your point, they all disintegrated in 15 years. Now they have to spend half of what they paid for the park to bring in new
Yeah.
homes just for the
Hmm.
same cash flow. That just, to me, that doesn't make so much sense.
So
And I
let's
see where
switch.
you're coming from.
So let's switch over to the idea of for those of people who are not looking to create these notes, looking to buy them, right? I don't know if you offer this, so I apologize if we asked this beforehand. Do you ever sell a note that you created?
Yeah, so we do look at vacating the notes that we create under a seller carry program, right? The notes themselves are fully qualified. So the individual goes through underwriting and has a RMLO stamp off on that note. So an individual fits a criteria of 600 credit, no past criminal, no open bankruptcies, no past evictions, and verifiable income. Now, depending on how they verify that income, we have some leeway doing like self-employment programs
Sure.
and things of that nature. But
Hmm.
also on top of our initial underwriting, the community is also doing an underwriting for the community themselves. So do we check for felony convictions? No,
Yeah.
but the community does. The community does a full first underwriting. So once we get their application back from the community says they're good, they go through the financial requirement of getting that seller carry loan, and we're off to the races. And at that point, we make a decision. Okay, are we needing to recapitalize to go out into the market and go after other opportunities and sell that note to an investor at the full face rate? Or we hypothecate it, which you had mentioned earlier. And I think that for personal property mobile homes, for capital investors, the hypothecation model, I think, fits a little bit better for this type of asset class. Why
Hmm.
do I say that? Because we have such a cyclical processes. We're a licensed dealer. We have 10 sales agents that are already selling mobile homes across the valley for Jenny Mae and Roger that wants to buy a house. We broker that house. the advantage of the hypothecation is you have a vested partner within that note. So if anything does end up going wrong or the note ends up coming due and we have to recash flow that property, you have a vested partner that has boots on the ground. We have about 12 to 15 rehabbers that work for us full time and a full sales staff. So to be able to take that property back and establish it out on the market creates, I think, a more secure strategy for an individual that may not be as savvy. So the two are buying a note whole, right, which comes with its inherent potential risk of a note going non-performing. And if that happens on a primary note holder, we give them access to our back office. So at cost, will allow them to use our attorney, go through the eviction processes and things of that nature. So they don't have to call, John Robb, who's, got $5,000 retainer or whatever, which is a challenge. You're trying to, recash flow that property. So anyway, those, and then the hypothecation, right? So whole note and then hypothecation are the two strategies that we're offering.
So one of the questions on Facebook was, do you offer a loan guarantee for investors?
So we've talked about that. There's no personal guarantee. It is a pledged asset in order to garnish capital investment, which is the definition of hypothecation. That being said, we have looked at that potentially to do a buyback, not a personal guarantee, but a potential buyback. And those are things in conversation right now as we're rolling out this fund. So Silvercrest Opportunity Fund is a opportunity fund that we're rolling out to raise larger capital from accredited investors backed by these personal property notes. And the fund would probably provide some form of buyback or really, at no information to the investor, we end up just retaking the property back and reselling it because it's in the fund. We're all vested together.
Yeah. Because I know a lot of us would love to buy notes, especially at 15%, right? It'd be really cool to get those assets in our hands. Would you be willing to sell off one or two of them, or are you looking for people to partner with you guys moving forward?
Yeah, so from Diversified Mortgage Expo and Paper Source, the Note Expo, meeting Nathan and Dave here, I tell you, over the past, I think, year and a half to 2 years, from our growth and meeting clients at these conferences and associations and finding our niche within this business, we've grown an investment clientele list that's somewhat healthy, could always grow more. But that being said, we've come into an issue of not being able to facilitate the demand for these notes that we're currently originating here in our market. And that created an opportunity for an individual to additionally take a first right of refusal on a construction loan. So that allows us to take a capital investment backed by a lien for an investor on like a 10% annualized interest only payment or 12% deferred, where on that specific note, when we've already acquired it, they get a first right of refusal on the seller carry note that comes available. And really, we did that out of necessity for the investor, where we wanted to additionally satisfy the demand and the appetite, as well as capitalize further in our market. Like I said, mobile homes are 10% of housing here in Arizona. I've done 250 in 5 years. It's $1 billion industry, mobile homes. It's quite literally, I think, one of the next most explosive markets in the country, and Warren Buffett sees it. He owns Clayton and Cavco, the two largest manufacturers of mobile homes, 21st Mortgage, and then a few other smaller time lenders. But with the state of emergency in housing and high rental costs, high labor and material, ultimately creating a high rental rate when they build the property, it really, I'm excited.
Before Nathan gets to his final question, I want to some of our Facebook chat here going backward was, how do you find these mobile home for sale, what's your typical strategy to find these homes? Because that's always a difficult thing, right?
And then
Yeah,
let me
no,
add, are you looking to expand outside of Arizona?
so yeah, definitely looking at expansion. The challenge with expansion is the boots on the ground. So really, I'm gonna start courting, I think, some trusted individuals in other markets and start to figure out how we further collaborate and maybe make a brand play out of it, where we go to like Florida or Texas,
Franchise,
some
yeah.
yeah, some hotter markets. And then I
Hmm.
skated over your question, Dave. Your
That's
question
okay.
was, how do we find mobile homes? And we're actually rolling out an education platform called Mobile Mailbox Money for people that want to buy and flip manufactured housing, and that's called Mobile Mailbox Money, piggybacking off our note sale website. But that being said, we've found great inroads, obviously with for sale by owners. It's kind of a cheesy answer. Uh, but like, scouring Mobile Home Village, Facebook Marketplace, as well as one of the biggest areas of success for acquisitions from us is the parks. Going to talk with the manager who
Hmm.
on the 5th of the month has to collect everybody's lot rent. And on the
Hmm.
7th of the month, Alden Guajardo rolls in, hey, who's behind on payments, blah, blah, blah. Can they use a cash offer? Can we save someone from eviction today? That's a big deal with a cash offer, obviously on an asset that makes sense financially. But finding those little bit more dilapidated homes, depending on your savviness in rehab and things of that nature, just definitely want to be careful about the homes that you're buying. But parks, parks are a great asset. The managers, 9 times out of 10, may raise a gun at you for walking in the door, but it's about breaking that communication barrier
Yeah,
because they hear, oh, I'm a flipper or whatever,
Hmm.
and it's a negative connotation. They don't
Sure.
really so much want to deal with that. But when you involve a story of, hey, listen, we're buying this house, rehabbing it
we're
here,
improving
selling
your
it
area.
here, we're improving the quality of the community. We bring
Yeah.
private finance for sell carry. Like, oh, wow, here, I got 3 keys. You want to go check these houses
Yeah,
out? Like, sure.
Hmm.
interesting.
Very interesting, Alden.
You're making us sweat. You're making us sweat and think that
Uh,
maybe our hesitancy has been a little bit misguided.
And that is fantastic. Why is that fantastic? That's fantastic because that means that there's more game for me and you guys here
Yes.
today. I'm telling you right now that this is being overlooked by institutional investors that are buying these parks
Yeah.
who may have to be quiet. No, seriously, I'm telling you
Yeah.
right
Yeah.
now that there's a new frontier while BlackRock, Vanguard, and State Street are pushing people out of affordable home ownership and residential real estate and multifamily rental rates. They're hedging the market, want to own 40% of residential properties by 2030.
Yep.
Where does that leave people? Their income hasn't kept up. Labor and material costs are rising at all-time highs. And meanwhile, Warren Buffett's just chefing it left and right.
That's awesome.
Hmm.
Go ahead, Nathan. Let you finish up our conversation.
Interesting. Yeah, very interesting, Alden. We're learning a lot here. So we like to kind of finish off every one of our podcasts just asking, what do you see coming down the pipe? What's your crystal ball on where the market's going, specifically with mobile homes? And I think you've talked about that a little bit, but what do you got for us?
Yeah, I saw, I think it was Klaus Schwab was saying that, they're going to make some big changes by 2030. And BlackRock was like, you're going to own nothing and be happy. What does that mean? That means residential properties are going to stay unaffordable. They are. Whether rates go down or rates go up, they're going to hold strong because there's an institutional appetite for these properties to hedge the market. We just saw the biggest bloodshed ever in the stock market. Where do they recoup those gains? In residential real estate and owning these properties for 100 years, pricing out hardworking Americans, new families, and active retirees. Where do they go? They go to mobile homes because
Mhm.
prices, I believe, I don't have a crystal ball. It is an election year, so we almost saw an assassination the other day. There's a lot of crazy things going on in the market, and I think that it's all pointing to residential pricing and rental rates holding value, I think, across the board, because if rates go down, prices go up, and there's been a reduction of products coming out on the market because the
Yep.
COVID delay, the delay in permits, now labor and materials double what it used to cost. But I'm gonna draw my conclusion there.
Awesome. Well, Alden, hang out for after hours. We appreciate if you need to reach out to Alden in the comments in the chat on YouTube. This will be recorded on our podcast, everything else. You can use the link to get his information. But Alden, thank you very much for some awesome information and swaying us in a way we didn't think we'd be swayed today.
Yeah, no, happy to be here on the show, recapping
Yeah.
Diversified Mortgage Expo, talking to Nathan and Dave. That's
Woo-wee.
mobile mailbox money, baby.